Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is my technical analysis review of the markets. It is currently Wednesday, January 15th, 2025, and this newsletter is divided into 6 major sections. As you know, the market had a nice big gap and go today on that weaker CPI inflation data. The market has had a nice rally this week since Monday after it rallied off that demand zone. It is now nearing some resistance areas, so we'll see where it goes from there. Again, market had a great day today. The S&P 500 gained 107 points, approximately 1.8%, and the NASDAQ was up about 2.5%. So big day for the markets. You could see on the S&P 500 how we rallied off the demand zone from Monday, which we talked about last week and the weekend. And we're now finally nearing the underpinnings of a little supply resistance area. So we'll see how the market reacts there. Today, the banks, financials had a great day. We're in earnings season now, and it's starting with financials. Here's Goldman Sachs. You can see it had a breakaway gap over resistance. It's right near a breakout resistance high. You can see the pickup in volume today. And also, our mechanical systems continue to do well. Here's our QE system that I did an intraday YouTube video on. It continues to hold this trade, which I already discussed to our subscribers. And here's an example of our volatility systems. Amazon went long on Monday, closed out today. And Goldman Sachs, remember they had earnings today, but it had taken a first and second entry. Second entry is on Monday. Excellent trade there. Again, my name is Matthew Frailey. I'm the founder of BreakpointTrades.com. Founded it in 2003, 21 years ago, to provide the best technical analysis on the planet, actionable trade ideas, dozens and dozens of mechanical trading systems that we alert our subscribers to via trade notification and SMS. We have mean reversion systems, we have our KISS systems, volatility systems, etc. If you're on YouTube, you should consider subscribing. Click the enroll button on the webpage, or at the very least, sign up for our free newsletter and receive at least 1 or 2 emails per week. All right, let's go ahead and get back to this general market newsletter. So again, as I said, great day for the market. It's been a good week rallying off that support. Now we'll see how the market does right around these inflection points, around the resistance areas coming up. Again, there's positives and the negatives. The positives I see in the market are the drop in the 10-year Treasury yield, which we had a big drop today. The inflation data, high-yield corporate bonds are outperforming the S&P, and the S&P 500 and the general market tends to follow high-yield corporate bonds. By the way, that bell was TradeStation, so in case you wondered. And also earnings season. Market tends to generally hold up in earnings season. So those are some of the positives for the market. But let's go ahead and get started here with things. And let's talk about some of these systems. So first image below here, item number 2. This image shows the open mean reversion system trade for the website that I sent out last Friday, the SPY QE system. What does QE mean? It means quantitative edge. All right. So anyway, this went long on last Friday for a first entry. I sent out a trade notification to our subscribers, so hopefully you guys took that trade because it's now a very nicely profitable trade. Intraday, I made a YouTube video. It was about a 5-minute quick YouTube video, discussed the trade, what it was looking for. And anyway, one thing I discussed on the video was a trend momentum hold condition that could trigger based on the momentum indicator, the slope of that indicator, where you see at the bottom here. And that actually triggered today. So this trade, instead of closing out, it's actually going to hold, stay long until the momentum indicator turns red or the slope turns back negative. That said, I decided to issue a sell half today. So we took off half the position today, and we're keeping half, and we're just going to let it ride for the system. Again, that was a subjective exit. The system didn't scale out. It is going to continue to hold. But back here in July of last year, you can see how the system had a nice little bounce trade. It exited perfectly on that lower high. If you look at that momentum indicator, it was red. So during times when the system gets its mean reversion move, it looks at that momentum indicator, and if it's green, it'll hold the trade. It's kind of like handing off the baton in a relay race. These systems have multiple factors. They first look for their general mean reversion move, just like you see back here in mid-December when it caught that nice trade to that lower high bounce. It caught the mean reversion, and because the momentum indicator was red, it got out. Had a nice winning trade. But the systems can hold trades longer than a simple mean reversion if some of these other trend conditions occur. So, again, quick update on that. Next, image number 3. So here's the trade statistics for this mechanical system. And again, it doesn't include this current open trade. I'll update these once that trade closes, but you can see awesome profit factor, 20.3. Again, if you know your mechanical systems, the profit factor of 3 is generally considered very good. So that's excellent. 90.25% winning trades, 154 total trades. It's actually 155 since we have this open trade. In the past, there's been 30 consecutive winners, only 2 consecutive losers. That's pretty awesome. Excellent profit curve. And the average time in trades for this system is about 11 to 12 days. Okay. Next, here's some of the volatility systems that took recent trades. I actually have 14 of these volatility systems. They're different than the mean reversion systems. They use their respective volatility instrument and Bollinger Bands for their triggers. So it's kind of like our VIX Bollinger Band system. So, for example, all these instruments have their own volatility instruments. So for Amazon on TradeStation, it's VXAZN. That's the Amazon volatility. Again, it's like the VIX, but it's for Amazon. And for Goldman Sachs, it's VXGS. But anyway, Amazon took a long trade on Monday, closed today for a nice little profit. And Goldman Sachs here went long last Friday. First entry, second entry was on Monday. Excellent close today, especially with those earnings and the moves on the banks. So excellent trades here. Again, we have 14 of these systems. Next. So here's in case you're wondering, here's the actual statistics for the Goldman Sachs volatility system. So it's a profit factor of 3. It's not, a profit factor of 20 like that SPY mean reversion system, but still respectable. A lot of trades, almost 250 total trades, around 70% winning trades. These volatility systems tend to be very short term, anywhere from, 4 to 5 days. You can see the average time in trade anywhere from, about 5 days to 6 days. Okay. All right, moving back to the general market. So item number 6 shows the index sector table, what transpired today. Like I said, big day for the market. S&P up 1.8%. NASDAQ up about 2.5%. Dow up 1.6%. Russell small caps up 2%. Nice gains for the week as well. As far as the 21 market sectors, all the sectors were up except for consumer staples. So very broad-based rally. And currency-wise, U.S. dollar down 0.2%, down 0.5% for the week. That's also helping things, and the precious metals a bit. Cryptocurrencies, Bitcoin up nicely today, 3.25%, up 5.5% for the week. And remember, guys, Bitcoin typically follows the indexes, especially the NASDAQ. It doesn't really trade inverse to those. It's not really a hedge on the market. It's more of like a leveraged play. So market continues going higher. I expect Bitcoin will. If this rally stalls in the general market, I expect the rally in Bitcoin will stall too. Moving on to commodities here, almost all to the upside. As you can see here, crude oil up 3.3% today. That's a big move. General index up 1.6%, natural gas up 3.5%, copper up 1.3%, uranium, agriculture, corn up again. So big moves there. And precious metals, gold up 0.75%, silver up 2.8%, reversing yesterday's losses. GDX, the gold miners, up 1.1%. And the bond market, here's the thing, guys. I've been talking about that 10-year treasury yield. Nice sell-off there finally, and it's down for the week. That's another positive for the market. If that continues, that will help things as well. And item number 7 is the economic news counter. Like I said, we had the PPI, CPI inflation data this week. Market liked that. Tomorrow we have retail sales in the morning, initial jobless claims, Philly Fed, export, import, etc. A lot of various stuff. And we'll see how the market reacts to that. But the big news items this week, were the CPI and the PPI. Okay, guys. And like I said, we're now starting earnings season. All right, let's jump to the index charts. So chart number 8, here's the snapshot of the 5 key major index. Like I said, coming into this week, prices were near the lower Bollinger Bands on these indexes. And you can see we've rallied off those lower Bollinger Bands nicely so far. The S&P and NASDAQ are right around their middle Bollinger Bands. Next, chart number 9, here's the Dow Jones itself. So far, it's found support once again in this demand zone. It's now up here just shy of the 50-day moving average. Remember, the last rally stalled right at the broken channel line, which I warned about. Now we'll see. Is the bottom in? We got a nice RSI divergence there. Or do we form a lower high again, maybe up around here? We'll see. Moving on to the S&P 500 charts. Here's the weekly S&P, which is up 2.1%. Okay. So again, we've had a nice pullback from basically early December. So far, we've bounced off this little demand zone again. Here I added a little downtrend line to monitor. So now, again, do we go to new highs here again or not? We'll see. But so far, a good start for the week. Obviously, no changes in the bigger trend. We've been in this nice uptrend channel here for the past year and a half. Chart 11, here's that weekly S&P chart where if the market wanted to have a bigger fourth wave correction, it could. But still up in the air on this, guys. So this fourth wave, if it is a fourth wave, we should see at least 500 to 900 points. But again, if this rallies up enough and just goes to a new high, then, the fourth wave will be put off for a later date. All right. So the bulls have done a good job this week of pushing it up. Now we'll see what it does near some short-term resistance. Next, chart 12, here's the S&P KISS trend system. Now this is still in cash. This is the daily. Remember, it took that trade last week where it abruptly stopped out. And the guys, I know some people asked me about that. It did its job. The system had 3 great trending trades in a row for the last year and a half. So one little whipsaw trade, it was due. Okay. Should the market want to go back to new highs, this system will eventually go back long again. All right. And again, if you need to be long or you think the market's going to go up, then some of our high performance KISS, some of the smaller time frames are already back long. Okay. Like 30-minute UPRO, stuff like that. Some of the NASDAQ triple Q intraday KISS systems. Next, chart 13, here's the 4 time frames. Again, on the daily, we're way below the ATR, which is now way up here. On the half day, we had that support cycle, which I talked about on Monday. Nice rally from there. Now we're nearing that ATR, so that's a little resistance. Price on this time frame has been following the cycle indicator pretty good, so one thing to note is if we get a resistance cycle show up, that'll be important. Nice rally off that 130-minute from the support cycle in the Mark 9, which I talked about on Monday. Next, moving back to the standard charts, here's the standard daily S&P chart. Again, you can see how we filled that open gap on Monday. That was a magnet. Those gaps on the indexes are always magnets, guys. We got slightly into that demand zone before rallying up. Big rally today, testing that underside of the 50-day moving average and the bottom of that supply zone. So you have a supply zone range here. You have a downtrend line from the recent highs. So this is a zone. We'll see, does the market power through here or at least struggle through here a little bit, which wouldn't surprise me. But given the strength of the move here, I'm a little more optimistic. That said, on a pullback, I like to see it form a higher low. And we'll see. Chart 15, here's a half-day chart. Just shows you some of the supply and demand zones, the gap. We filled that gap. Bounced off the demand zone. Now we're working up. And this here offers a further supply resistance zone above. Next. Chart 16, here's the other daily or half-day chart. So Here, under this scenario, we would have a wave 4 already in place, and then we're going to go up to a new high in a wave 5. Certainly possible. Again, for better confirmation, you really want to see the S&P at least take out that little supply zone, and you want to see it take out this downtrend line and that recent lower high at 60.21. Some good action so far, though, in the RSI, breaking this little coil. Chart 17, here's the 60-minute chart. So nice move up here. Here I added fibs from the recent high. So the 61 fib, notice how it's coming in around 59.75, just around this first downtrend line. So that's a big important area. And finally, short term, here's a 15-minute chart. Notice we got a little MACD divergence here on this time frame. So again, we'll see if we get a little pullback maybe tomorrow, just because if we had a big move. And that's it. All right, moving on. Chart 19, here's the triple Q's KISS system daily, just like on the S&P. This is still in cash. Remember, it had that little whipsaw trade recently. And so it is out in cash. Again, like I said, some of the smaller time frame, high performance stuff, I think the triple Q's 130-minute system is back long. Chart 20, here's the 4 time frames of the Qs with these indicators. Again, very similar look to the S&P I just showed you. On the 195-minute, we bounced off that support cycle, the Mark 9. Below the ATRs coming up, and on the 130-minute, bounced off the Mark 9 support cycle. ATRs coming up. Back to the standard chart, chart 21. Here's the clean daily chart. Again, nice bounce. Notice we're right below the 20-day. You have the downtrend line here, resistance area. So this is the area, resistance zone to watch. See if the bulls can break through that or not. Chart 22, here's the chart I showed on Monday. So the bullish view would have that we could add a 4th wave in, and we're going to rally to new highs in a wave 5. But again, onus is on the bulls to clear some of these resistance areas. Chart 23, here's a half-day chart. Shows you the resistance area up here, the downtrend line, and this supply zone right here at between 522 to 528 roughly. Chart 24, here's 60-minute chart. Here also showing some symmetry moves. The last 2 rallies were roughly the same point symmetry-wise. So anyway, watch the downtrend line, watch the fibs, and we'll see what it does tomorrow and the rest of the week. Next, looking at some of these large cap stocks. Remember, they represent a huge portion of these major indexes, so we always want to keep an eye on them. They're holding up well. Here's Meta, rallied off that support area where it needed to. It's still in a coil here. Okay, this could be a long if it breaks the coil, or put a stop at, say, yesterday's lows. Chart 26, here's Amazon. So Amazon bouncing a little bit here, potential wedge-like pattern. The bullish view would be an A, B, C, D, E wedge. Chart 27, here's NVIDIA. NVIDIA bounced back today, well off those highs though, of course. To me, you obviously have that bigger demand zone here, which we rallied off of in mid-December. But to me, you got a kind of an important support right here that needs to hold. Chart 28, here's Microsoft. So this has been one of the weaker big cap techs, but it did bounce off this demand zone for now. It's got some good resistance here at the declining 20-day and 50-day moving averages. And finally, chart 29, here's IWM small caps. Again, absolute textbook. You can see how it gapped down on Monday right to the 200-day moving average, which also almost perfectly matched the 61.8 fib. So you had 2 important technical levels right there. That was a very low risk, long opportunity. Plus you had your RSI divergence and a little bit of MACD divergence too. So logical area, nice rally. Now there's a little resistance zone right up in here. Let's see if it can clear that or not. And that does it for the major indexes, guys. So there you go. And again, guys, you can probably tell by my voice, I'm still quite congested, having trouble really breaking this. So I had to pause and cough a bunch. All right, let's move on. Chart 30, here's the VIX. Nice drop in the VIX today, as you would expect. Let's take a look at the 60-minute time frame. Here's the 60-minute VIX. Didn't quite get into that supply zone that I had marked, selling off. Notice there's an unfilled gap below. So on a further market rally, these gaps below would be targets. By the way, there is a gap to the upside here, which I forgot to mark. Remember, the VIX loves to fill these gaps. And chart 32, here's the percentage of stocks in the S&P 500 that are trading above their 20-day EMA. And man, this chart has played out. Remember I talked about this in late December, a couple weeks ago. I said when this got very oversold on that first decline, I said oftentimes for a true bottom you need a second test, just like you saw back here in October of 2023. Well, that ended up being a good technical observation that occurred, and now you could see this indicator's rallied up as the market's been pushing. Moving on to the bond market, chart 33, here's the 10-year treasury yield. Nice sell-off today. That's good to see. The market really needed that if it was going to attempt a good rally, especially if it's going to attempt a new high. We need to see this continue to decline. We didn't have any negative divergence at the recent highs, though, which is quite overbought. So really, the bulls for the market, they really need to see this decline further, lose that 20-day moving average. That would help. Next, chart 34, here's TLT 20-year bonds. Remember, they move opposite to rates. So TLT has been moving down when rates have been moving up. But to me, it really had a nice bottoming look. You had two back-to-back dojis the last couple days. If you look at an intraday time frame, you had some MACD divergence on a 60-minute. Well, nice bounce today. And chart 35, here's the leveraged view of TLT. It's UBT. So it's the Ultra 20-year bond ETF. And I posted this yesterday to our subscribers. I said you got a really nice tight trigger and stop there. I bought this yesterday and after hours. So nice move. This follows through. Up 3.5% today. Now, here was my evidence on the 60-minute time frame. You had that MACD divergence. So on a daily chart, when I'm looking for a mean reversion bounce off a doji, I want to see 60-minute divergence. If I don't see divergence on a 60-minute time frame, then often the trade is not ready. So that's how I use both the daily and the 60-minute, or in this case, a 2-hour. Next, chart 37, here's high yield corporate. Now, this is another positive for the market I mentioned. You can see how, first off, it bounced off this uptrend line once again, just like it did in December. This uptrend line goes back to April of last year. But this is acting stronger than the general market. And the reason that's important is because the general market tends to correlate with this. So this is a positive for the market as well. And look how tightly wound that moving average ribbon is. Energy is really pent up on this. Moving on to the market sectors, chart 38, here's financials. Again, financials and banks had a great day. You can see rallying off that demand zone I drew last week. And closing above its 50-day moving average, that's a really good look. Chart 39, here's the banks. So nice move as well. Nice pinched moving average ribbon there. Some ETFs and trade ideas. Here's FAS, that's the triple long ETF for financials. You can see your divergence there. Nice move. Here's Goldman Sachs, breakaway gap. Nice volume today. Look at that volume pickup. And moving average ribbon is pinched, which means energy is pent up. You got essentially now a breakaway, potential breakout play here. Chart 42, here's BK, Bank of New York. Also same deal. Beautiful breakaway gap on very nice expanding volume. So these banks look pretty good, guys. Moving on, chart 43, here's XLK Technology. So nice bounce this week, but again, you can see the issue here. Onus is on the bulls. These 50-day, 20-day moving averages up here. This is a pretty good resistance zone where it's going to struggle. Chart 44, semiconductors. did hold that lower support trend line, bounced up, basically in the middle of this range, in the middle of this large coil. Chart 45 transports, so far, nice rally near that 200-day moving average. Today, stalling at the 50-day moving average. Chart 46, materials, nice rally from that nice RSI divergent low. Yesterday cleared the 20-day, little gap up today. And chart 47, home builders, same deal. Didn't quite fill that gap that I was showing, but you had a really nice RSI divergence there at the low and a MACD divergence as well. Big move yesterday, closing above the 20-day moving average. Today gapped up right to the 200-day where it pulled back from. Black candle. The other sector that has been on fire is energy. Okay, so here's XLE. You can see XLE was right at the top of that range in November that I warned about. Basically had that waterfall sell-off. And now it's basically at a V rally off the bottom of that range. Getting quite extended here, but, you know, this is a good sign. This is likely next pullback should form a higher low. Chart 49, here's the weekly chart. Again, look at this. It's up nice 4 weeks in a row. Rallied right off the bottom of that trend line support and the demand zone. This looks like a large ascending triangle on the weekly. This is why I like the energy sector for this year. That was one of my macro calls. Next, chart 50, here's Oxy. Warren Buffett's favorite stock. Continues to hold up very well. Since it had a slight symmetry break here, odds favor a higher low on the next pullback. This was a really good buy if you bought this a few weeks back when Buffett did and we talked about it. Chart 51, Chevron. This is the weekly chart. Remember, it's been this big range for the last 3 years, but it's had a nice move up here. And the other oversold play, this Tidewater, you know, it basically had a 60% haircut from, May of last year. $111 to $46 into this weekly demand zone. I thought that was a good buy, so I own a little bit of that too. Oh, and the other one, here's the BP NER. That's the bullish percent energy index. So this gave a nice buy signal into this oversold region. Chart 54, here's emerging markets. So basically held that lower trend line we were talking about on the weekend and on Monday. Nice rally. It's going to have some work to do with these moving averages up here, but nice move. And the dollar, US dollar, if that continues to pull back, that will help emerging markets as well. So let's look at the dollar. Here's the US dollar, which, so far it's pulled back here the last couple days. Again, it's still technically in this uptrend channel, but you do have that RSI divergence. You do have the MACD divergence. So if this could start breaking this channel, that would help, especially the precious metals. Moving on, chart 56, here's Bitcoin. Bitcoin so far rallied once again off that demand zone. Again, kind of has a head and shoulder look, but as I said, guys, it's going to go where the market does. So if the market decides to go to a new high again, then Bitcoin's likely going up as well. If the market makes a lower high and comes back down, then I would expect Bitcoin to do the same. Chart 57, here's a cleaner version of Bitcoin. Shows you that demand zone and that 38% fib where we rallied off of. Moving to commodities, chart 58, here's DBC up 1.6% today. So really nice move, and it's been a nice move out of this coil. Basically testing those highs from last year. Chart 59, DBC on the weekly. Finally, it's starting to break out of this range that it's been in a couple of years. Energy's really been built up on it. Look at the moving average ribbon, how flat it's been and pinched. This could have quite a bit of move, guys. Chart 60, here's the monthly view. So I've talked about this before. You had the moving average ribbon. It was really starting to pinch on the monthly. You had the MACD recycle, and you see how it's curling up. So again, this looks like it's going to start another macro move up. Chart had been shown as the DBC SPY ratio. Remember this perfect wedge? Well, this is played out. It has had a perfect symmetry move so far, but this bodes well for commodities, as does this one. Here's the CRB to SPY ratio. So this wedge definitely played out. Remember I talked about this back in November and December before this broke out. This was an absolute textbook wedge playing out. Next, number 63, here's crude oil. Like I said, up 3% today. Nice move out of that little coil inside the channel. Then it broke the channel a couple weeks ago, and it's been moving up ever since. Nicely above its 200-day moving average. Here's the bigger picture view, the weekly. We've had it drawn as this large wedge, starting to poke its head above that upper trend line now. Number 65, UNG natural gas. So remember, natural gas had struggled at the 200-day moving average basically 8 times in the last year and a half. Finally, we had a macro change here in late December. Natural gas finally cleared the 200-day moving average and held it, and that was your macro bullish change. And you can see it's now trending up. Number 66, copper. After holding that demand zone, taking out that trend line, it's working higher nicely now. Number 67, DBA, still in this coiling action. Looks okay though. Number 68, corn, had a nice breakout last week, continues higher. Number 69, there's the weekly view of corn. Again, nice rally off that weekly demand zone from last year. Final part, let's look at the precious metals. Here's gold, chart number 70. Remember, gold topped out in late October. We've been looking for a fourth wave correction of some sort. You know, there's these 3 options. I've talked about the coil, the zigzag, etc. So far, it's following this coil pattern pretty well. Now, this is a true coil, though. This should be some sort of wave D, and then we get a little pullback in an E. So, and chart number 71, here's another version of the coil. A little cleaner chart. You can see the coiling action here. Wave 3, ABC of B, and we're working on this ultimate coil. Chart number 72, here's the tradable ETF, GLD. Chart number 73, here's silver. Nice rally back today, up 3.9%. Remember, it held that demand zone. Silver, I love it on the long term. I think it has a chance to go to $50 maybe late this year. And the last time I discussed platinum. Now, platinum's not doing much right now, guys, but I am keeping an eye on this. Platinum is severely underpriced relative to gold. I mean, that's $945. You got a multi-year coil forming here. And the other thing on platinum, as I stated, platinum relative to gold is the cheapest it's ever been, essentially. So the platinum to gold ratio is 0.35. I mean, you all remember platinum used to trade much higher than gold. You know, back here, for example, platinum traded well over 2 to 2.5 times the price of gold. So this chart goes back to 1980. The ratio has never been this low. Again, this is not about timing, but you want to keep an eye on it. I think eventually we're going to see platinum start to outperform and play some catch up to gold. Chart number 76, here's GDX, gold miners. Again, slight move up today. Now it's slightly above its 50-day moving average. Chart number 77, here's the other GDX chart I showed last time, this clean channels. As far as trade ideas, guys, I really didn't put much on here. I put some of the banks and financials. Tough to find a lot of good trade ideas after the S&P is up 110 points, and we are near some resistance. MXL was on the newsletter on Monday, and it did pop today. Chart number 79, here's a low-priced, very speculative stock, TVGN. It's got a kind of a inverse head and shoulder look to it. It's down near a support zone. And the 60-minute chart here, or 2-hour chart, I mean, you got a wedge ABC look pattern. Again, it needs volume, but kind of interesting. Again, it's a low price stock. It's a trade, not something you marry. And here's Interactive Brokers. Could be a little ascending triangle forming, and we'll see. Let me look at a quick check on futures. So ES futures tonight are up about 5 points. So again, we may need to consolidate here just because we've had a big move. And that'll do it, guys. Again, have a wonderful evening. Thank you for all your support. And for you BPT subscribers, hope you trade in those systems. Hope you took that last mean reversion system. It's been an excellent trade, easily paying for your subscription. Take care. Have a wonderful evening.